PTC stands alongside Siemens and Dassault as one of the big three global PLM giants. Its flagship products, Windchill and Creo, serve as the lifeblood for manufacturing titans such as Boeing, Caterpillar, and BMW. Creo remains one of the world's premier parametric CAD solvers, consistently ranking in the top 3 or 4 by market share, while Onshape is the undisputed leader in global cloud-native CAD. These platforms house decades of product blueprints, process parameters, and compliance data. PTC does not just sell software, it constructs the digital thread. By connecting CAD, design, PLM, management, SLM, service, and now AI-driven simulation, PTC has created a closed-loop ecosystem. High-profile agreements, such as the massive Codebeamer partnership with BMW and deep integration with NVIDIA Omniverse for robotics simulation, have solidified PTC's status as the de facto standard for industrial software. PTC maintains a gross margin exceeding 84% and consistent operating margins around 30%. 1. PTC's greatest strength: closed-loop, digital thread capabilities. PTC's primary edge lies in its ability to operationalize the digital thread. Unlike competitors, PTC seamlessly strings together data from conception to decommissioning. Deep CAD/PLUM coupling. Creo and Windchill are not just industry benchmarks, they achieve real-time data synchronization. Pioneer in hardware-software integration. Through Codebeamer, ALM, PTC solves the industry's biggest headache, managing mechanical parts and the software code that controls them simultaneously. Absolute cloud-native leadership. Onshape is currently the world's only mature cloud-native CAD platform. Its browser-based, multi-user collaboration model puts PTC half a step ahead of Siemens and Dassault in the race for future-ready digital transformation. 2. Why choose PTC over competitors? When facing rivals like Dassault Systems and Siemens, enterprises typically choose PTC for the following reasons: openness and interoperability. Dassault's ecosystem is relatively closed, pushing customers toward a full-stack lock-in. PTC's architecture is more open, allowing for the easy integration of heterogeneous legacy data, a critical factor for multinational corporations with complex supply chains. Lightweight, modern SaaS experience. PTC has undergone the most thorough SaaS transformation among the big three. For companies looking to ditch heavy on-premise servers for distributed R&D, PTC is the go-to choice. Deep vertical expertise. In aerospace, defense, medical devices, and automotive, specifically software-defined vehicles, PTC's compliance and configuration management are widely considered best-in-class. Risk note: Siemens' Accelerator cloud platform is catching up rapidly. Additionally, geopolitical shifts affecting manufacturing supply chains could lead to market share erosion in specific regions. 3. Why AI won't disrupt PTC in the short term. While AI is transforming coding and image generation, disrupting a system of record like PTC is nearly impossible in the near term. Rigidity of physical laws. General AI can hallucinate, but in engineering, a 0.1 millimeter precision error means a crash or a catastrophic failure. Industrial design requires generative design based on physics, algorithms PTC has embedded for years, rather than large language models, LLMs. Prohibitive switching costs, data sovereignty. A company's core design assets are locked in Windchill. AI is a powerful tool, but it requires this historical data to be useful. Industrial software is the bank of corporate knowledge. AI is the wealth manager. Without the Windchill vault, the manager has nothing to trade. Customers are more likely to buy AI plugins from PTC than trust an unverified AI platform. Complex engineering logic. Industrial logic goes beyond drawing. It involves complex bill of materials, BOM management, and regulatory standards that AI has yet to master. 4. Is 22 times PE expensive? As of April 2026, PTC trades at approximately 22 times PE. This valuation is highly attractive for several reasons. Historical comparison, PTC's historical valuation. Midpoint has typically sat between 30 times to 35 times PE. At 22 times, the stock is trading at a significant discount to its 5-year average. Cash flow inflection. Having moved past the pain point of its SaaS transition, PTC is entering a period of free cash flow, FCF acceleration. Recurring revenue, ARR, now accounts for over 90% of the mix. Shareholder returns. The company is executing a $1.3 billion share buyback program. Repurchasing shares at 22 times PE is highly accretive to EPS.